Good morning, everybody. This is Rudy coming at you live from sunny Palm Beach in Florida. It is Tuesday. It is August the 19th. I have a special guest with me today. I want to welcome Luke Alexander from Newcore Gold, and I'm going to give Luke a chance to introduce himself in just a second or so. Welcome, Luke.
Yeah, thanks a lot for having me, Rudy, and hi to all of your viewers.
Thank you. So, just by way of a very quick introduction for the people who have not heard of Newcore Gold before or are not familiar with the company, Newcore Gold is publicly traded. You can buy it on the Toronto Stock Exchange, ticker symbol NCAU. I'll add links to this in the description. You can also buy it over the counter, NCAUF. It's a Canadian junior mining company focused on gold exploration and development in Ghana. In the process of advancing its Enchi gold project, Newcore presents an intriguing opportunity for speculative investors seeking exposure to gold exploration upside, particularly in a rising gold price environment. However, as a pre-production explorer, it is a higher risk investment with no current revenue, relying on drilling success and project de-risking. I hope those were fair comments, Luke, as a sort of snapshot overview.
Yep, no, that's a good overview and kind of highlights where we sit in the curve of mining companies out there.
Awesome. So, how about we kick it off with an introduction to Luke Alexander, the man? How did you come about where you are now? What's your background? How is it that we get to speak to you today?
Yeah, so I spent the first 20 years of my career on the investment banking side of the business. I was in London for 12 years, covering all the big global natural resource funds out of the UK and Europe, advising different ASX, TSX, London listed companies, primarily mining and natural resources companies, so oil and gas and mining. A number of those companies did have projects in Africa. That's where I got very familiar with the continent. Worked with a number of management teams who had projects in Africa, helped raise money for them, advised them on different transactions. And that's where I got to know the team involved at Newcore. So Doug Forrester, Blaine Johnson, they would be co-founders of ours. If you look at some of the companies that they've been involved in. Newmarket Gold, that was a $10 million company that sold to Kirkland Lake for about 1.4 billion. Also Caliber Mining, which some of your viewers may have followed. Caliber is a company that we raised $100 million for to buy the B2 gold assets in Nicaragua. Then they went on to purchase additional assets and recently merged with Equinox Gold. And if you look at that company, the management team from Caliber is essentially running Equinox Gold today. So it's a team with a very successful track record. Through my time in London and working with them, we built up a relationship and they asked me to join as CEO of Newcore Gold. That was about 5 years ago. Since then, we've drilled about 115,000 meters on the project. We've put out a couple of resource estimates along with a couple of PEAs, and we're now in the process of moving that project from a PEA to a PFS, as well as continuing to aggressively drill on the project. So we can touch on all those things, I guess, as we walk through this interview.
Yeah, that's great. You sort of almost covered both of the kickoff topics in one fell swoop there. So right now, you said you were based in London for about 12 years, but right now you're based in Canada. Is that right?
Correct.
Yeah,
Yep.
and I did mention that the project is in Ghana, so
Yep.
we'll learn about a little bit about Ghana as well as we go through Luke's Q&A session, and
Yeah,
we'll
I mean, as you mentioned in your intro, so Newcore Gold, we're advancing the Enchi project in Ghana. It's a district scale exploration project that's fundamentally underpinned by very robust economics that we put out in a PEA. That PEA was released in 2024. It was a major catalyst for the company. I think the market, once they saw the economics of the project, recognized this is a very good project in a very good jurisdiction. And we saw a significant re-rate in the company on the back of that. We then raised some additional money in 2024 as well as early 2015, and we can talk about some of that. And really, that then led to us starting a 35,000 meter drill program. So at the moment, we're aggressively drilling on the project, but also de-risking it from a PEA to a PFS. So district scale exploration, fundamentally underpinned by a project with very robust economics in a tier one jurisdiction, Ghana, which we can talk about as well.
Okay, awesome. So I'm looking at my notes here as you're speaking. So I have some notes related specifically to that project updates and drilling results. You're busy with a 35,000 meter drill program aimed at resource conversion, infill drilling, and testing extensions at key deposits. Um, are there like highlights of that particular program or related intercepts that we can sort of talk about and discuss as well?
Yeah, I'm happy to kind of get into a little bit of detail, and I think you also kind of when we chatted ahead of this mentioned that putting a bit of an education lens on this could be helpful as well. So we can
Hmm.
kind of walk through some of the exploration that we're currently doing, but I can also break it down in terms of the approach that exploration companies will take from a exploration perspective. So I guess first thing I will just highlight is, with this presentation, I will be making some forward-looking statements. So I'd encourage all your viewers to go to our website and just read through this. While you're there, I'd also encourage you to sign up for the various newsletter that or not newsletter, but the mailing list that we've got, along with some of the other social media platforms that we're active on. So from an exploration perspective, I guess our project is situated in the southwest corner of Ghana. You've got two prolific gold belts that run through the country. You've got the Ashanti belt, and then we've got the Sefwi Bibiani belt. And a lot of very large deposits have been discovered on both of these belts. So if you look at the Ashanti belt, you've got some of the biggest deposits in the world, including Oboesi at 66 million ounces, Tarkwa at 25, Wassa at 15. On the Sefwi Bibiani belt, which is where we're situated, just down here on the southern end of the belt in Ghana, you've also got some very large endowments. And the reason I say endowments is because part of these deposits have been mined out. So, they if you add the historical resource they have plus the existing resource, that gives you the endowment of these projects. So Chirano sits at 5.5 million ounces, Bibiani 6.5 million. Then you've got Newmont Gold, the largest gold company on the planet. They sit with a 20 million ounce resource and are continuing to add additional ounces there. So very large deposits along the belt from us. And then just on the other side of the border, so we border with Cote d'Ivoire. And then on the other side of the border, you've got ASX, Australian listed Taraco Gold with their Afema project, which today sits at 3.6 million ounces. So very large deposits along trend from us. From an exploration perspective, when we look at our project, it's a very large project. So that's one of the things to look at when you're looking at project is, how big is is the overall package, and what sort of targets are there on the project. So when you look at our project, it's 248 square kilometers in size. So I guess that'd be about 180, 190 square miles. We've identified to date roughly 25 targets across the project, of which we've only drilled on 9 of them, and 5 of them make up our resource today. So lots of additional opportunity for us to go after these other targets. In terms of the approach that, we've taken, as well as other exploration companies will take, is one of the first things you'll do, and I'll just show you the project here. Again, this yellow outline is the 248 square kilometers that I mentioned. What we did at the beginning is we ran airborne geophysics across the entire project, And what this helps do is ultimately identify the different structures on the project where there's a higher probability that gold will ultimately be sitting. What we've got on the Sefwi-Bibiani belt is you've got the main Bibiani shear, so the larger fault that runs along the east side of our project. And then what we get is what we call second and third order splays. So these are shears that come off of that main Bibiani shear. And typically that's where the gold sits on the Sefwi-Bibiani belt, is on these second and third order splays that are coming off of that. When you look at the total strike length on our project of those second and third order splays, you're looking at about 100 kilometers, or call it 60 miles. So again, this is one of the things when we talk about district scale, is the fact that we have so much of this shearing going through our project. Another thing that we did at Newcore and most exploration companies will do is soil sampling. So this is where you just go along and you take samples of the samples at surface across the project. So if you look closely here, you'll see these different lines going through our project. And what our geologists will do is they'll walk along, and every kind of 50 to 100 meters, they'll get a sample of the soil. We then take that sample to the assay lab where they test it to see what type of mineralization, and in our case, how much gold is in that. We then obviously with GPS, we record where every single one of those samples are taken from, and then you compile it into where you think the best targets are on the project.
So
And those,
Luke,
yep,
these are just surface samples that they are collecting?
correct.
Okay.
Correct. Exactly. So surface samples along those different along those different sections on our project. So you then look at where those, concentrations of gold sit. And if you look at that relative to where a number of our targets and discoveries have been made, you'll see that they line up very well. So airborne geophysics, then surface sampling is a couple of the tools that we'll use at an early stage from an exploration perspective. Um, Rudy, I was gonna then talk about kind of first pass drilling, and then more definition drilling if you want.
Sure. This is great, by the way, as a sort of a highlights reel of what you're doing. Just on this map that we're looking at right now, where is
Yep.
most of the current 35 millimeter drill program located?
Yeah, so on our project specifically, Sium is our largest deposit, followed by Boeing, Niam, Quachikrum, and Tokasea. You'll see the bulk of the drilling that we've done as part of this 35,000 meters is from Sium, Boeing, as well as Niam. You'll also see that we've done some follow-up drilling at Kojina Hill. We've also identified a very exciting structure here at the southern end of our Sium deposit, which we're doing some follow-up drilling on as well. And then we can get into talking about the opportunity at depth as well, if you'd
Awesome.
like.
Yeah.
And that's another area that we're obviously very excited about. So
Yeah,
from
that'd
an
be great.
exploration, yep. So from an exploration perspective, what we'll typically do is first pass drilling. So once we've, from an airborne geophysics perspective and then a soil sampling perspective lined up where we think the most prospective areas are on the project, we'll then typically go in and drill at, let's say, 200 to 400 meter spacing. And those will be relatively shallow holes just to test kind of the first, let's say, 25 to 50 meters to see where we then want to do follow-up drilling. On the back of that first pass drilling, we'll have identified, and honed in on some prospective areas. We'll then go back in and do some additional drilling to start to tighten up the spacing and increase the confidence in the mineralization in the ground. So that's the approach we take and most exploration projects take to ultimately start to define resource. Then to move resource from, let's say, an inferred category into an indicated category, you then need to go into even tighter drill spacing, which, Rudy, if you want me to get into that level of detail, we can do that as well. Um, I guess
Hey,
for us,
Luke,
yeah.
if you have time, we have time. So if you want to sort of give us a highlights reel on that, then feel free to do so and go ahead. It's educational for all of us.
Okay. After the first pass drilling, let's say, we identified Sium, which today we've drilled tens of thousands of meters into as our largest deposit, followed by Boeing, Niam, Quachikrum, and Tokasea. We also made discoveries at Aradi, Kojina Hill, an area here called Naquanta, and another area, Sium South. These four areas in yellow here, those are areas where we've maybe put, call it 2 to 5,000 meters of drilling into, made discoveries, but ultimately didn't have enough drill density to be able to wrap a resource around it. So these we put into, call it previously drill tested areas where we've made discoveries. They warrant additional drilling to then look to be able to wrap a resource around them. And the way you ultimately, categorize a resource is you work with an independent consulting engineer or resource geologist to ultimately then have them model the drill holes that you've done to then wrap a resource around it. What we're kind of focused on at the moment is taking a lot of our project from an inferred resource to an indicated resource. And really the difference is the drill density, so the spacing of the drilling to move it along that path and ultimately de-risk the ounces in the ground. So if we look here, for example, at some of these cross sections, I can, kind of explain it. So from a first pass perspective, maybe you'll drill one hole, which will then give you, a certain amount of resource around these ounces. To then move that from inferred to indicated, you'll start to drill additional holes. And then you're able to calculate the intercept between those holes to give you additional confidence in the resource in a certain area. Here, for example, we've put 3 holes into this area. And, with that tighter drill spacing, let's say 25 meters between these different holes, and I'm just using this as a random example, you'll now be able to get confidence that there's mineralization between all of these sections, and the engineers and resource geologists will then be able to say, yep, we're comfortable with the ounces that are in the ground there, and we're happy to move them into that indicated category, which is a lower risk category for ounces. So your question about, the drilling we're doing right now, a lot of that drilling is focused on, infill drilling, which is, tightening up the spacing in between these different sections to give that added level of confidence from a drilling perspective. If we look at Boeing, for example, and we look at the 3D model here, you can see where a lot of these holes are being drilled. They're in between the different sections, again, to move that mineralization into those other categories. So Rudy, maybe I'll just pause there because I'm conscious I've kind of talked a fair bit about the exploration process, but I kind of got the sense that you were hoping we would walk through some of that as part of this call.
Yeah, so th this is great, by the way. Just as a sort of an introduction and an overview, it's in depth and it's very good. Maybe what we can do, Luke, is spend a few minutes to sort of touch on the key economic drivers. and then walk us through the concepts of going from that preliminary economic assessment or PEA to the post PEA, like what happens then. So the PEA was 2024, right? So it's
Yeah.
fairly recent, and then sort of what does that tell us, and then what do we do next, sort of as a logical next step as we go through this exploration process?
Yeah, sure, no problem. Maybe I'll just start here with your with your first question, which I think was around some of the uh the capital structure and share structure of the company.
Okay.
Or do you want to jump into the PEA first?
No, okay, let's go here. This is fine because I mean, at the end of the day, standard sort of typical uh, you know, stock questions include things like, how much cash do you have, and when do you need to do another financing round, and what's your debt, and what does your cap table look like? So why don't we go here, and then we go to the PEA?
Okay, all right. So yeah, I guess from a corporate snapshot perspective, we've got roughly 250 million shares outstanding. From a trading perspective, we trade about 385,000 shares a day, so we've got good liquidity, good volume in the stock. From a fully diluted perspective, we have about 300 million shares outstanding. And it's important to highlight, today, or I guess at the end of March, we had roughly $15 million Canadian in the bank. And we've also got warrants outstanding. So these warrants have a exercise date or an expiry date of September 26th. So roughly 9 million warrants with a strike price of 40 cents Canadian. Today we're trading around 60 cents Canadian. So those warrants will expire at the end of September. So at the moment, we're getting a number of investors who are exercising those warrants to convert them into stock. But as they convert those, obviously cash comes into Newcore. So we're expecting roughly $3.5 million of proceeds or cash to come in from the exercise of those warrants. Assuming those warrants stay above that 47 mark, 40 cent share price, we would expect that all of these 8.9 or 9 million warrants and roughly $3.5 million will then come into the company.
Hmm.
We've then got an additional roughly 20 million warrants, which expire in February, which I guess is what, 5 or 6 months away from now.
Yeah.
And those have an exercise price of 50 cents. So again, assuming the market continues to remain stable or robust, then we'd expect all of those warrants to get exercised, which would bring in an additional roughly $10 million. So
Hmm.
$3.5 million from the existing warrants plus an additional 10 million. So it's important to highlight that because obviously that additional cash, coming into the company will allow us to potentially expand drill programs to, complete additional work beyond the PFS. With the 15 million of cash today, we're funded for all of the PFS work as well as our current 35,000 meter program. So any of this money here will allow us to do work beyond that and obviously give the company cash to extend well into 2026 and 2027. The other thing
Okay.
I would just kind of highlight, and obviously for investors, one of the key things, and I think Rudy, you talk about it, is alignment with management and board with shareholders. So management and board, we own 15.15% of Newcore. This is stock that we've bought alongside investors over the last number of years. So it's not a company where we gave ourselves a bunch of stock at pennies a share and then expected others to invest in the company. We've put money in alongside investors all the way through. Also important to highlight is our institutional support. So these groups here, many of them you'll probably know. but these are long-term focused, primarily mining and precious metals investors. So they're dedicated and focused on the sector. We've grown this institutional ownership from 0 to 55%, pardon me, over the last 5 years. So having that kind of support is really helpful as we move the project forward. Most of these investors are taking a 5 to 10 year view and recognize, that the company is gonna kind of move along a path from exploration to development to production, and there'll be funding requirements through that entire phase.
Awesome.
Um, and then maybe just the last thing is research coverage. So, we've currently got three major investment banks, Canaccord, Haywood, and SCP, who cover us from a research perspective. So their analysts put out research on the company, follow all the press releases that we put out, have built models on the company to ultimately then come up with target prices or expectations of where investors could potentially see the share price going. So this combination of having a good strong cash position, cash coming into the company, shareholder alignment, strong institutional support, as well as strong support from the investment banking community is one of the key things to look for when you are looking at capital structure of a company and analyzing that aspect.
So Luke, well, firstly, maybe just for the benefit of the audience, the references that Luke is making to the warrants that are outstanding right now in terms of where we're trading at about 60 cents or so, they're all in the money at 40 and
Correct.
50 cents respectively. So that's the expectation of the cash coming in. Then, how about the cash burn rate on a current basis? So you have about $15 million in cash. You showed us what's coming in. What's your cash burn rate currently on a monthly or quarterly basis?
So it will fluctuate depending on how much we're drilling. If we're not drilling at all, we can, bring the cash burn down significantly into the hundreds of thousands of dollars. When we're drilling, probably the easiest way to look at it is we're spending about $1 million a month.
Hmm.
So again, as we get to the end of our 35,000 meter drill program, we'll have a good cash balance in the bank, which will then allow us to potentially expand that program beyond 35,000 with some of the cash that we're expecting to come in from the warrants. But that being said, if for some reason cash weren't to come in, we've structured the business that we can fluctuate our activities up and down really quickly. At the end of the day, exploration is a very cyclical business, and markets will turn, up quickly and they'll turn down quickly. So we have set our business up in such a way that we can adjust very quickly if we want to ramp drilling up or down. And then again, if we're not drilling, then our cash burn is significantly less.
What about debt, Luke? Are you carrying any debt on the books right now?
No, I mean, again, as a pre-revenue company, we wouldn't look at debt at this stage. It can just, again, as a cyclical
Hmm.
business, it can be very dangerous to take on debt.
Yeah. Okay. All right. So this is probably a good segue then into the next section where we can talk a little bit about the PEA and the post PEA program as it relates to Newcore right now.
Yeah, so as we've kind of chatted about, and I guess I would encourage anyone watching, if you're interested in getting into more detail on the PEA, we do on our website have a full call it 30-page PEA presentation, which gets into lots of different aspects of the PEA. I guess just from again with the education lens on, which I think Rudy you mentioned would be helpful. So PEA, preliminary economic assessment. So for companies as they're advancing a project, there's a number of different studies that can be completed. So an initial study might be a scoping study, which is a very basic rough study that looks at what potential economics of a project could be. You've then got a PEA, or preliminary economic assessment, which is what we put out in 2024. Again, if you go to our website, you can see there's a full 350-page report that goes into a lot of detail for the PEA. That PEA is completed to a standard which is called 43101. That's a standard that's required by the regulators, and it's an outline that all companies need to follow when they are putting out this type of a study, so that you've got uniformity between different companies and how the information is presented. So when a PEA is completed to that 43101 standard, that's the same standard that all companies use. So you can then, somewhat compare apples to apples, the different companies and the different projects. Beyond a PEA, you then have a PFS, so a pre-feasibility study. So Newcore, we're in the process of taking our project from PEA to PFS. And what happens through that process is an additional level of de-risking. So the conversion of ounces from inferred to indicated, that's one of the critical things for a PFS. You can only use indicated ounces, so those de-risked ounces, to feed the mine plan for a PFS. Beyond a PFS, you then have a bankable feasibility study, or a full feasibility study. That's another level of de-risking, where there's been full engineering work completed on all of the different components of the project, so on and so forth. So those are the different studies. What I'm going to talk about now is the PEA. So in 2024, we put out a PEA on our project. What we outlined was a very simple open pit heap leach operation. One of the advantages of a heap leach operation is you don't have the same CapEx, or capital requirements, to build it. You don't need to have the same mill and other infrastructure for that type of a project. We used an 1850 gold price for the study as our base case, and that produced an after-tax NPV of $371 million. So if you discount all the cash flow back, for the project, this is ultimately what it says the project is worth, using a 5% discount rate.
Mhm.
We then also look at it at a $3,000 gold price, just to reflect what it would look like in today's gold price environment. And at $3,000 gold, when you discount all of that cash flow back, you're looking at a $971 million after-tax NPV. From an IRR perspective, you're looking at 136% IRR, less than a 0.7-year payback period, all-in sustaining cost of just under $1,100. So what does it cost per ounce to produce the gold? And then from a CapEx perspective, or a capital perspective, how much does it cost me to build this mine? Is roughly $106 million. And it has a production profile. So over the 9-year mine life, how much ounces do we produce? On average, we produce 122,000 ounces over that mine life. One of the things that I guess I can highlight as well is, the group that we used to put together this, or one of the groups we used, was Lycopodium. They were the lead engineering company that we used. If you look at all the other projects they've been involved in for a number of these major gold companies down here, you'll see that their projects have either been on time, ahead of schedule, or on budget, or under budget. So they're really the gold standard from an engineering firm for projects in West Africa. Important to highlight that Newmont, the world's largest gold company, has also used them and is currently using them in Ghana to build their $1 billion expansion at the Ahafo project. So all of that information and knowledge was used to help with this study here. Um, this again, I'd encourage you to go to the website and you can work through some of these slides. And if you have questions, you can reach out. But this really gives you a snapshot of the key parameters for the project. So over the life of mine, how many tons are there that are being mined? What is the strip ratio? So for every ton of ore, how much other material without gold in it do you need to move? You know, what's the head grade, the life of the project, all of those things you can look at in some detail here. From a production profile perspective, you're looking at 122,000 ounces per year over the life of the mine, peak production of 155,000 ounces. Again, you can go to our website, you can look at all these different factors and how they impact the production profile. From a cash flow perspective, again, if we look at this at a 2350 gold price, you're looking at $855 million of after-tax cash flow. If you look at it at a $3,000 gold price, you're looking at roughly 1.3 billion. So, pick your gold price and you're somewhere between 855 and 1.3 billion of after-tax cash flow. So, year one, 144 million. Year two, 151. Year three, 132. So from a payback perspective, one of the things I pointed to was 0.7 year payback. So you can do the calculation here. If you look at $106 million of capex relative to 144 million of cash flow being produced in year one, you're looking at that roughly 0.7 year payback. So again, that's the way you can look at that. Maybe Rudy, last thing I'll just touch on is leverage to the gold price if that's helpful.
Yeah, sure.
Okay. So again, for our study, we used a base case of 1850 gold. That produced an after-tax NPV of 371 million. So again, discount all the cash flow back that we were just looking at in the last slide, and what's that project's value on day one. One really simple way of looking at it is for every $100 move in the gold price, the NPV of the project goes up by roughly after tax US $50 million.
Mm.
The market cap of Newcore today is roughly, call it 100 to 110 million. So for every $100 move in the gold price, we're adding roughly half of the market cap today.
Yeah.
When you get to, recent trading range of, call it 3,000 to 3,300, I mean, the numbers are standout. You're looking at 971 to 1.1 billion dollars of after-tax NPV.
Mm.
You're looking at 136 to 156% IRR, and again, 0.6 to 0.7 year payback. So those are the numbers that, you can kind of go to our website, you can look at this table, you can come up with, whatever gold price you want, all the rest of it. And that's, that's something you can decide for yourself. But, leverage to the gold price is ultimately something that our Enchi project and Newcore provides as well.
So, Luke, just from a sort of more philosophical point of view, or maybe just just to have a little bit of fun with this, where do you see gold going? We're at 3,300, 3,400, whatever. Obviously, there's a lot of fear mongering out there on a macro basis, and some of it is justified, and some of it perhaps is just clickbait. But at the end of the day, there seems to be a general consensus that gold and other precious metals and industrial metals are basically in an upswing cycle. What are your thoughts on that? Just tell us what you're thinking.
Yeah, I mean, from a gold price perspective, I mean, I've found it really interesting to see gold perform as strongly as it has in the face of, uh, high rates in, good yields in the U.S., strong U.S. dollar, all these kind of, typically fundamental things that would weigh on the price of gold. Interestingly, if you go and look at a lot of the buying that there's been for gold over the last couple of years that's ultimately driven it to these all-time highs. A lot of that is coming out of China and out of the East. A lot of it is central bank buying. We've had unprecedented levels of central bank gold buying over the last couple of years. I think as the North American investor and in particular, the US investor wakes up to, the opportunity in the gold space and actually starts to buy gold, that could create another whole leg up for the commodity. If you look at some of the recent kind of ETF buying that we've seen coming out of North America, it's starting to kind of point to, that buyer coming in. I mean, at the end of the day, for gold equities, it's still a very small sector, and it does not take a lot to ultimately move and have outsized returns for the sector. And we've been seeing that in 2025. I mean, gold's been, one of the best, if not the best performing asset class out there. So,
Mm.
I think we could see another leg up for gold here, as we start to see portfolios move a portion of their assets into gold, and in particular into gold equities.
Yeah, thank you. It's also interesting for me, just more from a casual observation point of view, to see what investors are doing, because you have some of them who are focused on sort of non-producing assets and more from a value store point of view, like gold, and others more focused on a producing asset like mining, as opposed to holding the physical asset. And then, of course, you get people who take a blended approach and they do a little bit of both. From a personal preference point of view, I actually prefer the producing asset over the non-producing asset. It's almost like Warren Buffett's comment of saying, if I buy all the gold, all I can do is look at it all day long because it's shiny and it's pretty. So I'm ad-libbing, obviously, but he said something like that, was quite amusing. From again, just from a personal point of view, Newcore is potentially a good investment. And by the way, I am, for the sake of transparency, I'm long in Newcore. I actually own some stock, but it is ideally suited to aggressive investors who are bullish on gold and comfortable also with junior mining volatility. I think, Luke, you've probably touched on all the bases, but before we wrap it up, maybe spend a few minutes and talk to us about the geopolitical risks or the jurisdiction. Ghana. Obviously, you've mentioned it a couple of times during the discussion, uh, and we know it's a very attractive gold belt located in Africa, very actively mined by a number of major companies. But maybe there are always questions about jurisdictional risks and political shifts and permitting delays and, the usual kind of questions that people like I would have of people in your position. So maybe talk to us a little bit about Ghana as a jurisdiction.
Yeah, absolutely happy to chat about that. Well, one thing maybe I'll just comment on, just picking up on your comment about, investing in the sector. I mean, at the end of the day, I think when you're investing in the gold sector, you need to take a very similar approach to the approach you'd take to investing in any sector or investing in the broader market. So you have physical gold, you then have large producing companies with multiple assets across the portfolio, which are obviously lower risk as a result of having multiple assets. And then it kind of trickles down from there. You then have potentially single asset producing companies where, there's potential added leverage because of growth within those companies. And then you've got development stage companies, you've then got exploration, and then you've got greenfield exploration companies.
Hmm.
The further you go down that path, the more you're getting into venture capital type investing. And as a result, the higher risk venture capital type investing, you take a spread approach and you typically invest across multiple companies, and you potentially take a smaller stake in those, but it's a diverse portfolio that you ultimately look for. What I think we're seeing now is a lot of the producers have, been appreciating meaningfully because often that's where the capital goes first. And as those companies start to get more expensive, you'll start to see more money flowing down into, the mid caps and the smaller companies. And that's always or typically been the case is, the money flows into the bigger companies first, and then it trickles its way down as those companies become more expensive. I mean,
Mm.
just as an anecdotal comment, I mean, this summer has probably been one of the busiest summers from a M&A perspective as well as a capital raising perspective. I mean, historically, investment banking 101 was never look to raise money in July and August. This July, August, I've seen more money raised in the mining sector than I've seen in, the last number of years gone by. So I think a lot of funds and investors are positioning themselves heading into the fall where, as people are back at their desks, we could see, a continued move up for the precious metal sector. But that's just my kind of comment. Back to your main question,
Okay,
which
maybe
was
maybe just before you go back to that main question, I
yep.
just want to mention a couple of weeks ago I actually made a video uh, talking about 10 different small cap stocks, diversifying across a portfolio of a variety of more volatile, perhaps higher risk investments. And just yesterday, I was speaking to someone who basically cut his teeth at Canaccord Financial, and he was saying that was exactly the approach that they used to take as well, where you have a situation where if you have, using my example, 10 of them, you need one of them to pop, and it sort of right sizes the entire portfolio. So that video is in the library if anyone wants to look it up, and I shared it with you as well, Luke. So that's kind of the approach I take anyway. So I appreciate that. But yeah, let's go back to Ghana before we wrap it up and talk a little bit about what it's like to do business in West Africa.
Yeah, so Ghana is Africa's largest gold producer. It's the sixth largest gold producer globally, just behind the US and Canada. So it is again, Africa's largest gold producer, sixth largest globally. It's very important for the economy. It's important for the tax base. It's important for jobs. It's important for FDI. So with all of that, you've also got a very supportive government who recognize what an important sector it is. Interestingly, Ghana actually produces more gold on a per square kilometer or per mile basis than Nevada does. So it's a relatively small country, about 240,000 square kilometers, but you've got this huge amount of production that's concentrated within the country
Hmm.
because of, the prolific geology that there is there. But what, I always say to investors is, don't listen to me. I'm a single asset, biased CEO, but look at what the major gold companies are doing. You've got four of the top 10 largest gold producers on the planet with meaningful operations in Ghana, including Newmont, as you know, the biggest investor out there, Anglo Gold, Gold Fields. We then have Zijin, who's recently come in and bought Newmont's non-core asset, the Achim asset, for $1 billion. Newmont is then in the process, as I've mentioned earlier, spending another $1 billion in country to expand their Ahafo project, which will make it their second largest producing mine in their entire portfolio, just behind the Nevada Gold Complex. So Ghana is a very important jurisdiction for all of these major companies. And it's something we say to investors is when you are looking at a jurisdiction, because there is different risks within different jurisdictions, is, look at what the mid cap and major companies are doing in those countries. If you don't have any mid cap or major companies, there's probably a reason for that. If you've got lots, then that's probably a good sign, and you can take some comfort in the fact that those companies are in that country. We've also
Awesome.
seen a lot of M&A activity, which is another thing I would point to in terms of the desire to get into a country. You can either explore, develop, and build a project, or you can come in and buy a project. So we've seen a lot of projects getting acquired. We had Shandong buy the Cardinal or Namdini project, which was owned by Cardinal back in 2021. Interestingly, within 3.5 years, they've brought that project into production and are producing roughly 350,000 ounces from that project. So from buying it to putting it into production, 3.5 years, and that's a very large project, 350,000 ounces. You've also got, Chifeng, who bought Golden Star primarily for their Wassa asset. So, lots of activity on the M&A front in country as well.
Awesome. Okay, so what we can do, Luke, and I appreciate that overview. I'm just going to quickly read a closing comment here for me, which I obviously wrote prior to making the presentation. In summary, Newcore offers compelling upside in a gold bull market with catalysts like drill results and PFS progress potentially driving re-rating. But we should monitor gold prices and exploration news closely. It's best as a speculative holding in a diversified portfolio, as we discussed. And I think if gold sustains, for example, even just above $2,300 per ounce, the leverage could be rewarding. Otherwise, obviously, risks might dominate, which are ever present anyway. So before I let you go, I will add some links to your website in the description below the video. But are there other ways for people to follow you, like on social media, or if they have questions, is there a way for them to reach out to you, which is perhaps the easiest way to get a hold of someone at Newcore?
Yeah, so we are very active on social media. So if you're on LinkedIn or X, we've got a YouTube channel or Facebook. Any of those platforms, we do put a lot of content out onto those. That's something we've had a lot of very positive feedback on in terms of keeping investors and prospective investors and the market updated on what we're doing at Newcore. I mean, when you go to our website, you'll see that there's a mailing list there. So whenever we put out news releases, if you're on that mailing list, you'll obviously receive it. And then, there's a link on there to reach out directly if you have any questions. You can email us, as well as, within the website. Obviously, we've got most up-to-date presentation. We've got PEA presentations. There's full technical reports on there. So a lot of those things that I've been talking about on here, you'll be able to find all of that on our website. But then, yes, social media is another great way to follow us.
Fantastic. So, Luke, from a personal point of view, I really sincerely appreciate you taking all this time to educate us and to tell us about your project in Ghana. And on that note, I'm going to wrap it up and just remind my audience to hit the like button and the subscribe button if they want to follow for more content like this. And from a personal point of view, me to you, Luke, thank you so much for your time. Really, really appreciate it. Take care.
Yeah, my pleasure, Rudy. And thank you for your time. And thanks for suggesting we set this up. Always happy to do it.
Awesome. Thank you.